No, I guess it's two things. One is the direct effect of the tariffs, and we don't know exactly what tariffs we will have, but we assume that we will have some tariffs imposed by the Trump administration. That will, of course, hit some of our major export companies. But then, of course, we talk about the wet blanket over the economy, i.e. the uncertainty that comes from the policy uncertainty that might delay investments in the corporate sector, but also delay consumption and maybe especially durable goods in the retail sector. So if you add that together, I think it's pretty clear for us that it's going to be a slower economy. The big question mark is how much slower.
Well, on that note, can you give us a little bit of insight on what specifically you're going to be watching and what matters most? Is it the magnitude of the slowdown that we see? Is it the pace of the slowdown? Right now, it's a lot of it is just in the soft data. We haven't actually seen a lot of this weakness come through in the hard data yet.
No, so of course growth is important, but more important, of course, given that we have an inflation target, is the inflation dynamics. And if we take kind of the textbook kind of argument, you could say if we have a substantial drop in growth, we'll probably have less price pressure. But then we also have the risk of the tariffs kind of spreading into inflation in Europe, especially if you would kind of answer the U.S. tariffs in more aggressive manner. No, I think the uncertainty, and this is kind of the most popular word now around, but the uncertainty here is extreme. And when we talk to corporates and we actually allude to some of the anecdotal evidence we have, there's a very much a wait and see mode. If we look on the data, it's not so clear. In the retail sector, yes, consumer confidence is down a lot. But if you look on the corporate sector, it's fairly muted. So we, of course, need to have more information, both from the soft kind of survey data, but eventually also in, let's say, a little more hard data, production data, consumption data, and so on. Again, we are pretty confident that we will have a slower economy. How much? Question mark. And then the inflation dynamics. We are leaning a little bit in the direction that the most likely outcome is slower growth and less inflation pressure. But we're for sure not totally convinced about that scenario.
Many economists out there, and I'm just looking at a few hot takes on the Bank of England decision, and obviously it's a different situation here than in Sweden, but there is a view circulating that central banks are risking being behind the curve by not acting proactively to preempt this downturn in growth that is expected. Are you concerned about being behind the curve if you don't ease policy further sooner?
So this was an important part of our discussion in our board, and I'm not overly concerned, but I think it's a very relevant question. So this is a balancing act. The more confident we get in which scenario is most likely, then we will act. So if we have slightly slower growth, not any dramatic, and let's say an inflation dynamic that is kind of rather more inflation than less inflation, then of course we will be on hold, in some scenario, even hiking rates, but that's for sure not the main scenario. And then in the maybe a little bit more likely scenario, a drop in growth and a slightly less inflation pressure. Today, it's very much a guessing activity. So we need to have a little bit more certainty, but I'm not saying that we need to be totally certain, because if so, then the risk is exactly as you say in your question, the risk is that we will be behind the curve and be too late. And we don't want to be there, but we don't want to be too quick either, i.e., let's say, cut rates now and then regret ourselves a couple of months later. That would, I think, be a larger policy mistake.
Well, it's certainly a difficult predicament to be in with all this uncertainty. Sir, to what extent has the sharp appreciation of the krona contributed to your lower inflation expectations?
To some extent. We don't think that the feed through of krona movements are super big. They were slightly bigger actually when we had the upturn inflation, but for sure it's very welcome that we got finally, because we have been arguing for that the krona has been too weak, that we finally got the appreciation. Of course, this is very much a dollar movement, so dollar weaker across the board, but actually the krona has been strong in itself. We have been strengthening to the Norwegian krona, we have been strengthening to the euro. So I think it's welcome. It's welcome from the inflation point of view. I think it's also welcome from a balanced economic growth perspective, because if we have too weak krona, the risk is that, of course, we kind of subsidize the export sector too much. So at this stage, I would argue that it's welcome.
Very clear. Sir, you obviously don't operate in a vacuum here. To what extent is your decision making on policy linked to what the European Central Bank does on rates?
There's no direct link, and we have shown that we moved earlier than they did when we cut rates. Now we had slightly upturn in our inflation. We also saw a slightly stronger economy, so now they are kind of, let's say, catching up. So it is important. What you could say, I think, is that we've learned that the interest rate differential is not as important for our policy, in the sense it doesn't seem to affect the krona value, and maybe in the same extent that it used to do. You could do the comparison with the Norwegian krona. They have a substantially higher policy rate, but still a weaker currency than we have. So. But then again, Sweden's most important trading partner is the euro area. So for sure, there is a strong influence from the euro area in our economy, and hence also in inflation and growth, and in that way also in the policy making. But it's not a direct link, and we try to evaluate it, of course, in an independent manner.